Every term life insurance policy in Canada comes with a renewal option. It sounds like a safety net, and for some Canadians, it quietly becomes the most expensive financial mistake of their retirement. Stay with me, because by the end of this video, you'll know exactly what happens to your premium at renewal, and the one decision made years earlier that either protects you completely or leaves you with nothing you can afford. Here's how a standard term policy works in Canada. You buy a 20-year term at age 35. Your premium is locked, let's say $45 a month. Healthy, affordable, protecting your family through the years that matter most. At age 55, the term ends. You have two options. You let it expire or you renew. Renewal sounds simple. What the policy documents don't walk you through is what that renewal premium actually looks like. The same coverage, renewed without medical underwriting at age 55, can cost 5 to 8 times your original premium. Renewed at 65, 10 to 15 times, sometimes more depending on the carrier. That $45 a month policy, I've seen renewal quotes in Canada landing between $400 and $900 a month for the exact same face value on a fixed retirement income. This is what I call the renewal trap, and almost nobody sees it coming. This isn't the insurance company making a mistake. This is the product working exactly as designed. Term insurance is not permanent coverage. It was never meant to be. It is a temporary, high-value tool for the years when your financial obligations are highest. Your mortgage, your dependents, your income replacement years. The problem is not the product. The problem is that most Canadians treat a term policy like a permanent plan, and nobody corrects them until the renewal letter arrives. By then, your health may have changed, your insurability may be gone, and your options in the independent market, which would have been wide open at 45 or 50, have quietly closed. Pause here for a second, because what I'm about to tell you is the section most insurance content in Canada completely ignores. This is the conversion window, and once you understand it, you will never look at your term policy the same way again. If you're somewhere in your 40s or early 50s watching this part is specifically for you. Most term policies sold in Canada include a conversion privilege. This allows you to convert your term policy into permanent coverage without new medical underwriting. No exam, no health questions. You convert based on your original health rating. This is one of the most underused options in Canadian insurance. Not because people don't want it, but because nobody explains it to them at the point of sale. You're probably thinking about your own policy right now. Maybe wondering if yours has this option. Maybe realizing nobody has ever brought this up in a review. As a licensed insurance professional, I'll tell you directly, the conversion conversation should happen at policy review, not at renewal. If your advisor has never brought this up, that is the advisor gap, the space between what you were sold and what you actually needed to know. Here is the contrast that matters. Renewing your term at 65 on a fixed income means paying market rates for a 65-year-old body, regardless of how healthy you are. Converting a portion of your term at 52, while your conversion window is still open, means locking in permanent coverage at your original health classification, permanently for life. One decision costs you every option you had, the other preserves them. In Canada, conversion privileges vary by carrier and by policy. Some windows close at 60, some at 65, some earlier. The only way to know yours is to read your actual policy or have a licensed professional read it with you. That letter at the start of this video isn't a surprise to the insurance company. They knew it was coming the day they issued your policy. The only question is whether you knew and whether you had time to act. If your term policy renews in the next 5 to 10 years, the conversation to have is not about the renewal. It's about your conversion options right now before anything in your health changes. Cover IQ exists because licensed truth should be accessible to every Canadian, not just the ones whose advisors happen to mention it. Here's what I want to know. Drop your answer in the comments. Do you know when your term policy expires? And has your advisor ever brought up the conversion option? Just yes or no. You'll be surprised how many people are in the exact same position. If this video gave you something to act on, subscribe. Next video, your bank sold you insurance. Here's who it actually protects. And the answer is not who you think.